Hi, everyone. Welcome to the latest Take 5 with Ryan and Sonu. Sonu, we're titling this one, Why Stocks Just Bottomed. As a lot of you might remember, last week, if you watched last week's video, we talked about markets in a correction. Stock market down 10%. Very scary. A lot of scary headlines and worries out there. Sonu, a funny thing happened. We just had one of the best weekly rallies we've seen in years, as we saw some positive things. I'll let you talk about some of the economic things, but I just want to put it like this. Historically, it is what it is. Late October tends to be when markets tend to find a bottom. You tend to see you tend to see equity strength in November and December. You had that washout. Everybody was bearish. When everyone sold, who's left? Potentially buyers. One final comment for me, Sonu, and I'll turn it to you. Get a little geeky on you, but hopefully this makes sense. In early October, we made a low in the stock market, and then we bounced, then the horrible war started, and we made new lows. We broke the new lows in late October. Here's what matters. If you look at how many stocks were making new 52-week lows back in early October, less stocks were breaking down to new lows at the end of the month. What does that tell us? Well, price made new lows, but most stocks didn't. That is underlying strength. And historically, you see that at previous major market lows when you have all this negative sentiment with the better time on the calendar, with late October, with this positive technicals. It says to us, we probably just made a major low. We might be ready for a rally. Sonu, turning it to you. The Fed had something to say last week that seemed to spark things. You want to talk about what they said?
Yeah, so the Fed had a meeting last week and they didn't rock the boat. They kept rates steady. But what was interesting is that the Fed had penciled in one more rate hike for 2023 in their September projections. But Powell downplayed that, right? He was asked, what about that the potential rate hike to come in December? He said, you know what, ignore it, right? The efficacy of those projections drop in 3 months. And committee members can change their views, right? So the markets are already pricing in no more interest rate hikes for this year. And Powell had every chance to change that expectation, shift it, and he didn't, right? So that's huge. His view is they've done enough, and now they wait and watch, right? He thinks the risks are balanced now. Last year, the risk was that they wouldn't do too much and inflation would stay high. Right now, he thinks, the risks are more balanced. So there's a risk of doing too much, right? And they don't want to throw the economy into, quote unquote, an unnecessary recession. That's huge.
I think we all agree there. And let's just talk about used cars for a second, right? Used cars were up 40% year over year when inflation was soaring. Now inflation's coming back. We just had economic data, Sonu, that said used cars dropped 2% last month in October, but are negative year over year 14 months in a row. So one of those big reasons inflation was high was used cars. That's why the Fed hiked rates as aggressively as they did. If used cars are coming back, supply chains are opening up, believe me, and there's always some pocket of inflation that's an issue. But Sonu, literally as we speak, gasoline's the cheapest it's been all year. You want to talk about why inflation matters to the Fed?
No, gas prices are down from, they were running nationwide average, right? About close to $3.90 a gallon. That's down below $3.40, right? As we talk right now, right? That's huge. Several places across the country are seeing under $3 a gallon. Not in Chicago where I live.
No, not in Chicago.
But no, what another thing Powell mentioned, he disconnected the labor market from, or what happens in the economy from inflation. Because he said over the last year, yes, we acknowledge the fact that the economy is actually accelerated, right? Over the last year, it's grown close to 3% year over year. And inflation's come down from 9% to under 4%. It's closer to 3.5% right now, right? So he's like, you know what? Maybe we buy that, right? And we want to see that continue. And again, as I said, we don't want to throw the economy into an unnecessary recession. So that's big.
No, absolutely. So we've got about a minute or so left. We're kind of wrapping up earnings season. So let me rephrase for a second. So we think stocks made a major low. We had over-the-top negative sentiment. You tend to get bottoms in late October. We're in this end-of-year potential rally. What's going to spark it? We said you just need need something to you need to light the match, right? Something to spark it. Well, the Fed likely being done hiking is one of the things. But then I think the realization also, Sonu, with a minute to go here, the economy is still strong. And what really matters to the economy? I mean, it's earnings, right? These third quarter earnings are wrapping up. They were expected to be down slightly on the S&P 500. I saw some numbers this morning. We're looking at maybe up 5 or 6% year-over-year earnings growth in the third quarter, way more than anybody was thinking. If corporate America is making new highs in earnings, that's got to be a good thing, right?
No, absolutely. Profits are what matter.
Mhm.
Profits run, safe to say, profits are what motivates a lot of people
Yep.
to, start businesses, spend more money, spend, on investments, things like that. So profits matter.
No, absolutely. So again, let's just put a bow on all of this. The Fed is likely done hiking. We've got an economy that continues to be strong, led by a healthy consumer, with potentially all-time high record profits next year on the S&P 500, and we still do not see a recession anytime soon. With all that, this is the latest Take 5, and we call this one again, Why Stocks Just Bottomed. See you next time.